Last week, the Dow Jones broke 28,000 for the first time in history. And in this week's video, we're going to take a closer look to see if the Dow Jones transports are following along, and also some interesting things that are going on underneath the surface of the NASDAQ.
As Matt just mentioned, the Dow Jones just broke 28,000 last week, as it was up over 1% and it now is up over 20% year to date. The S&P 500 and the NASDAQ were both up just under 1% last week as well, and now the S&P 500 up almost 25% for the year, while the NASDAQ is up just under 30%. The only negative US index last week was the Russell 2000. It was down 0.15, but still up 18% for the year. Foreign and emerging market stocks were both negative last week, with foreign down about 0.1. while emerging markets was down over 1%. But with that being said, emerging markets is still up over 10% for the year, while foreign markets up about 16%. Today we're looking at a chart of the Dow Jones Transportation Average, which consists of 20 transportation companies that are traded in the United States. And I want to talk a little bit about what's known as the Dow Theory, which states that when the Dow Jones Industrial Average makes a new all-time high, then it's expected that the Dow Jones Transports would follow suit in a timely manner. And as I mentioned, last week we saw the Dow Jones break out above 28,000 and make its all-time high. But as you can see on the chart here, the transportation sector has not done that yet. If you're looking at the chart, you can see that the Dow Jones Transports is right at a key resistance level, which is the blue line on the chart. And back in October of 2018 is when the Dow Jones Transports made its all-time high. The transportation sector is still about 4% away from its all-time high. And failure for the Dow Jones Transports to make an all-time high could be concerning for the markets through the end of the year. But if we see the transportation sector pick up, especially during this holiday season, then that could continue the momentum in the markets for the end of this year into the beginning of 2020.
Last week, Fed Chair Jerome Powell had a two-day testimony in front of Congress where he discussed both the global and U.S. economies, along with monetary and interest rate policies moving forward. Now, nothing earth-shattering came from these 2 days of testimony. But they did state that low inflation is a concern for them and that their long-term goal is to get interest rates back to the normal levels of 2%. They're currently sitting at 1.5%. They also stated that the current economy meets their prediction of moderate economic growth, so it's safe to assume we probably won't see any rate cuts here in the near future. The second story from last week is that we've seen a lack of volatility in the markets lately. And as the market continues to make record highs, rising for the past 6 weeks. This is the longest streak that we've seen in over 2 years. And currently the S&P 500 is up about 24% for the year, but it's actually made 7% of that return in over the past 6 weeks alone. Volatility continues to trend lower, as we haven't seen a move up or down of over 1% in over a month. And so far for 2019, we've only had 38 occurrences of a 1% or larger move, compared to 63 in 2018. Also, the VIX, which measures volatility in the market by price fluctuations, is at its lowest point that we've seen since August of 2018. Now, there was one concerning thing that happened in the markets last week, and it occurred in the NASDAQ. And it may signal that the low volatility streak that we've been on may be ending sooner than later, as the Hindenburg-Omen and Titanic Syndrome indicators both triggered. Now, if we can get past the ridiculous names, they've actually been a great predictor of uncertainty under the surface of a strong stock market. Now, what these two indicators measure is the number of companies that are making 52-week highs compared to the amount of companies that are making 52-week lows in a strong stock market. And last week, you would expect, as the market continued to push higher, that there were more companies making 52-week highs than lows, but that just wasn't the case. Last week, we actually had more companies in the NASDAQ put in 52-week lows than 52-week highs. So this is something that we're going to have to watch closely inside of the NASDAQ, as this has been the strongest US index for years.
There's not a lot of news on the economic calendar this week, so the biggest thing we'll be paying attention to is the continued progress between the US and China on their Phase 1 trade deal.
Thanks for watching, and please follow us on Facebook and YouTube, and also please share our video.